It is the 27th of March, 2023. My name is David Hickson, and in today's market update, we're going to be taking a quick look at the S&P 500. The reason why we're taking a quick look is because this is our first ever live stream. That's right. In fact, I haven't even told anybody I'm doing it. I've set up a camera, and there I am, and we are going to go into taking a look at the S&P 500. This is really a bit of a test to see whether this whole live stream actually works. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at the markets. We're going to take a look at the S&P 500, and I can move that camera aside so that I can actually focus on what I am speaking about. And in the S&P 500 at the moment, as you will know, we have a very prominent trough over here in March of 2020, the trough that I often refer to as the pandemic trough. And that is a trough that you can see has been phased in this analysis as a trough of 9-year magnitude. It is probably of at least 54-month magnitude. Whether it is a 9-year cycle trough is something that we are not able to confirm just yet, but it is certainly a big magnitude cycle trough. The important thing is that recently we have had yet another 18-month cycle trough over here in the middle of October of last year. Now, you will know that in recent market updates, I have been discussing the possibility of that trough in October of last year being a trough of either 20-week magnitude or possibly of 18-month magnitude. Recently, of course, it seems very likely that that is indeed a trough of the 18-month cycle. And I see that some people are joining us live. This is our first ever live stream. Let me say hello to everybody again, if I can find the right button. There we go. Hello to everybody, and welcome to our first ever live stream. I'm delighted to see you all here, and I'm getting comments as well. And I think with a bit of luck, I can even show these comments. Hello, Jose. Great to see you joining me here live from Madrid. And we've got Susan. Hello, Susan. And some guy. Fantastic. Wonderful to see you all. Thank you so much for joining me. This is a bit of a test, as I've mentioned at the beginning of the broadcast. I didn't even tell anybody I was going to be doing it. We're going to see if it works doing a live stream. And some guy is saying, would I mind analyzing a very long cycle someday? I would love to analyze a very long cycle someday. And in fact, I have some really interesting data going back to the 1800s. So one day I will certainly do that. And Susan is from England. That's fantastic. So welcome, everybody. And let's get back to the subject matter at hand. So that is what has been happening in the S&P 500 recently. Now, I've had many questions about the magnitude of this trough in October of 2022 and why it is that it is likely a longer cycle trough, in other words, an 18-month cycle trough, and why it is not indeed just another 20-week cycle trough. And the reason for that, of course, has to do with these cycle shapes. We're looking at a weekly time scale here, a weekly chart, and you can see that these cycle shapes are bearish. How can we see that they are bearish? We can see they are bearish because, of course, they move down into lower troughs for each one of the cycle troughs, and the peaks are early in terms of time. So we had a very early peak over here, and we had a fairly early peak over here. An early peak and a lower cycle trough indicates that we have a bearish underlying trend. In other words, the longer cycles are bearish. And so we had a bearish underlying trend, which I'm going to indicate with the downwards pointing arrow over there. And what has happened since the trough in the middle of October, and I do see some other comments. It's a little complicated, I must tell you, doing a live stream. I see some other comments. This live is saved. You can watch it later. It will be available on YouTube and also on Facebook. It can be viewed later, so you don't need to worry about that. And so we had an underlying bearish trend over here. I'm going to try to write the word bear. So we had bearish cycle shapes leading into the October 2022 trough. The cycle shapes that have developed since then have been undeniably bullish. And that is the reason why it seems likely that the trough in October of 2022 is a longer magnitude cycle trough. How much longer? It could only be a 40-week cycle trough, but it is probably an 18-month cycle trough. Why do I say that over this period of time following the October 2022 cycle trough, we have had bullish cycle shapes? The reason for that is, again, simply because the troughs have been at a higher level for both of these cycle troughs, and the peaks have occurred late. Now, the peak of the most recent 80-day cycle from the third week of December until the middle of March was not very late. It was at about the middle of that cycle. And so it looks as if the bearish pressure is beginning to diminish. And that is something that we are going to speak a little bit more about in a moment. Let me just mention some more of the comments. Thank you very much. I'll show my face again. Here I am. I'm live. It's a little later than I expected to go live, so the light is diminishing. Sorry about that. Tony is asking, where do I see the S&P 500 bottom? Right. Well, that's a really great question, and it in fact leads me into the subject of today's video. So what I'm going to do is I'm going to zoom out here on the chart of the S&P 500. This is a weekly chart, and let's speak about the slightly longer term picture, which is something I haven't done in market update videos for several weeks, in fact, probably a month or two. So what is the longer term picture? The longer term picture is that, of course, we probably had a big magnitude cycle trough over here in March of 2020. We have since then witnessed two 18-month cycles. Here is the trough of the first 18-month cycle in October of 2021. Although I must point out that many analysts believe, and I am one of them, that that cycle trough should have been phased slightly earlier, probably in May of 2021. The second 18-month cycle trough was over here in October. So we do, of course, have three 18-month cycles in each 54-month cycle. So what are we doing now? We are now in our third 18-month cycle. So to get back to Tony's question, where do I see the S&P 500 bottom? Well, we are looking for this third 18-month cycle to complete. And there is a circle and whiskers just off to the right of this chart for the next 54-month cycle, which, as you can see, is expected in about 2024. So that's roughly the time that we would expect. Let me just clear these markings and let me zoom out just a little bit so that we can get a better perspective of that 54-month cycle trough. An interesting thing is happening with that 54-month cycle trough, and that is that the circle, which indicates the time at which that 54-month cycle trough is expected, is off to the right of the chart. The reason for that is because that circle is plotted on the basis of the recent wavelength of the 54-month cycle. Now, the recent wavelength of this 54-month cycle is being calculated by measuring over the past 6 iterations or 6 waves of that 54-month cycle. So we're looking really far into the past. It is not likely that that 54-month cycle is still beating with the same wavelength that it was 6 times 4.5 years ago. In other words, almost 24 years ago. And so I would take that circle with a pinch of salt, not take it too seriously. What is more likely to be an accurate measurement of when we are expecting that trough has to do with the circles of these shorter cycles. And so here is the circle of the 18-month cycle trough. You can see that is expected in about June of next year, June 2024. And then the even shorter cycles, we have the 40-week cycle trough over here in about February of 2024. And here is the nest of lows for that next cycle trough. So this is when we are expecting the next fairly important cycle trough for the S&P 500. And if I display a composite model line, I think that you can see, and I might need to cut some of these cycles out of that composite model line, but you can see that the composite model line is indicating an exact position for that next major trough over here in about June of next year. So let's hide that composite model line and let's discuss what we are expecting. Tony's question was actually the price level, I think, in terms of where do I see the S&P 500 bottom. So let's speak about these 18-month cycles and let's start looking at price levels. First of all, the pandemic trough, which occurred in March of 2020, was probably a distorted trough. In other words, price was distorted to the downside. It was pulled down by the news events of the time. And so then we had a tremendously strong bounce, and it's a little difficult to draw an M shape in here for the first 18-month cycle because it was so stretched to the upside. The second 18-month cycle has been a rather strange cycle, as you can see, but it has certainly turned bearish. What are we expecting in the third 18-month cycle? The third 18-month cycle is likely to be the least bullish or the most bearish of these cycles. In other words, the outlook for the S&P 500 is not very bright into early next year, because we are expecting a more bearish cycle shape to elapse or to play out. Right, so that is roughly what we are expecting in terms of the current 18-month cycle. Let's zoom in and let's consider what we are expecting to happen over the next 20 weeks, because that is what I like to do, is focus only on the next 20 weeks. Sometimes when looking at these longer cycle troughs, it can be a little bit misleading because you can be a little too focused on those bigger magnitude cycle troughs. Sometimes it's important, in my opinion, to focus on the shorter cycles. And in this case, I'm going to focus on the 20-week cycle and discuss what we are expecting to happen over the next 20 weeks. So there we go. My live screen seems to have, let me hide the camera. There we go. Okay, so while we're on a weekly chart, I would like to point out something that is important that is happening this week, and that is this FLD for the 80-day cycle. Now, the FLD follows a fairly regular sequence, as I'm sure you know, because I discuss it very often in these videos. This 80-day cycle has not been following a very clear sequence, but what we are expecting to happen this week potentially is that price should climb up above this 80-day cycle FLD. If it doesn't, that would be a very bearish sign. Let's quickly take a look at the sequence of interactions following this trough in October of last year. Our first interaction was where price crossed up above the 80-day FLD. That is an A category interaction over there. The next interaction is where price comes down to the FLD. We label that a B category interaction. Usually we expect the B category interaction to be a place where price finds support at the level of the FLD. In fact, it failed to find support. It dropped below the FLD, and I discussed that at the time. That was in December of last year. There is the 80-day cycle trough, and of course we expect the B and then C category interactions to occur around about the time of the 80-day cycle trough. Our C category interaction in this case, because price failed to find support at the level of the FLD, was where price crossed back up above that FLD, and it in fact generated a target to the upside. That is a target that we discussed in an earlier market update video, and then of course price crossed down below the FLD over here. It did that only about a month ago, and that is of course a D category interaction. Price has achieved that target, I believe. I'm not going to actually calculate it here, but it achieved that target and dropped slightly below that target. Remember that you measure the target by simply measuring the distance from the previous peak down to the level at which the median price crosses the FLD, which is that level over there, and you extend the price movement an equal distance to the downside, and that will bring you down to a trough over here of the 20-week cycle trough. So the D category interaction is, of course, the interaction that precedes the 20-week cycle trough. Next, we are expecting an E category interaction where price should cross above this 80-day FLD. We need to be watching the 80-day FLD this week because, as you can see, the 80-day FLD is only a little bit above the current price level, and we would expect price to cross above this 80-day FLD. If it does, then, of course, we can generate a target to the upside, and that target would be at a level of about 4,200. That is, if it does succeed in crossing above the 80-day FLD this week. So that is what we are going to be watching for this week, and that will get us off to a good start for our next 20-week cycle. I should point out that this 20-week cycle so far has been a bit of a disappointing affair. Let's switch to a daily chart. There we go. So far, this 20-week cycle has been disappointing in the S&P 500. Price has moved up and has left behind a clearly demarcated 20-week cycle trough over there, but it has been a very disappointing move upwards so far. As an indication of what we are expecting, we can take a look at the cycle shapes in the previous 20-week cycle, and here we had some fairly clear and good M shapes for that first 80-day cycle. The second 80-day cycle had a very straddled 40-day cycle trough, and so it's not quite such a clear M shape, but those are the shapes that we experienced in the first 20-week cycle, or the 20-week cycle that has just completed. The next 20-week cycle, I should point out, is expected to be less bullish. The reason for that is because of the fact that we are coming into a 40-week cycle trough. And so in general terms, we are expecting a slightly less bullish 20-week cycle than the 20-week cycle that we have experienced. And so very roughly, that M shape that I have drawn over there is probably a good indication of what we are expecting for the current 20-week cycle. So I see some other questions there. Jura has asked about Bitcoin. We might take a very, very quick look at Bitcoin before I end today's live stream. This is our first ever live stream, so welcome to our first ever live stream if you are joining me live. Let's quickly finish off the discussion about the S&P 500 before we take a very quick glimpse at Bitcoin. And I'm going to do that by presenting the composite model line. Now, the composite model line will give us an idea of what we can expect from the next 20-week cycle. The composite model line is a very interesting tool in Sentient Trader. It takes the information from the analysis and it recombines all of that information in terms of the wavelength and the amplitude of each one of the cycles that has been found in the analysis. It recombines that information, recomposes it in what we call the composite model line. The composite model line gives us an indication of what we should expect. There are several tricks and tips about working with the composite model line. The composite model line is a very useful tool, but it's also a little dangerous, I should point out, because it can be a little misleading. First thing to say about this composite model line is it does give us an idea of what we can expect from the next 20-week cycle. As I indicated very roughly with the diagram that I drew a moment ago, we are expecting a less bullish 20-week cycle. In other words, we are likely to have an early peak. That's the first thing to be said about this 20-week cycle. We are expecting an early peak. In other words, it will occur before the midpoint. And the next thing that we are expecting is not a tremendously higher trough at the end of the 20-week cycle, because of course we're coming into this 40-week cycle trough, the nest of lows of which is down there at the foot of the chart. That is expected in about July. But now I would like to show you something about this composite model line. And the composite model lines I've mentioned is composed by using all of the information from the cycles. There are occasions, in fact, there are many occasions when you are performing a cycles analysis of a financial market where not every cycle is accurately represented in the price information. And in the composite model line, we can actually eliminate some cycles or take some of the cycles out of the composite model line. I would like to show you what happens if I take the 20-week cycle out of this composite model line. The 20-week cycle has been not contributing in a very positive manner towards this composite model line. The reasons for that are a little complicated. I'm not going to discuss that on this live stream. But if we take the 20-week cycle out of the composite model line, it provides us with a little more detailed information in terms of the cycle shapes that we can expect over the next 20-week cycle. And this is something that I like to do because it gives me greater granularity, if you like, in terms of what we are expecting. Price is now rising up to this first peak over here, which is a peak of the 20-day cycle. Then we would expect a little bit of a move down when price should come down and form the 20-day cycle trough over there. Then we will reach a higher peak. Notice that this peak here has been marked as the highest peak over the next 20 weeks, which is an interesting thing to look out for, that we might experience an early peak. Then, of course, we have the 40-day cycle trough over here. There's the 40-day cycle nest of lows. The next important trough really is the 80-day cycle trough, which is expected over here in about the middle of May. And here is the next 20-week cycle trough, which will also, of course, be a 40-week cycle trough expected in July. I hope that that composite model line gives you some idea of what to look out for. We should quickly display some of our other FLDs, and let me just hide this composite model line over here. If we zoom in and focus in on some of the detail, you will see that price has over the weekend crossed above the 40-day cycle FLD. That is, of course, what we would expect it to do, because this is probably a trough of the 20-week cycle, and therefore price should cross above the 40-day FLD and generate a target to the upside. That target, I think that you can see, and let's just very quickly roughly calculate that target from a level of about 3,800 to a price cross of 3,970. We've got about 170 points in there. So if we add 170 points, we're going to get to a price level of about 4140, I believe. Never do maths when you're live on YouTube. It's not really a very good idea, but I think we're looking at a target of about 4140 on the basis of price crossing above that 40-day FLD. And now let's quickly take a look at the 20-day FLD, because as price comes down into the first 20-day cycle trough, we would expect price to find support at the level of the 20-day FLD. Here is the 20-day FLD. It's that purple line over here. Here is when we expect the 20-day cycle trough to form. And if we measure the number of days from the trough that formed on the 13th of March, you can see that the average length of a 20-day cycle is 17 days. That trough is then expected at the end of March, on the 30th of March, in other words, later this week. And we would expect that 20-day cycle trough to form later this week. And we would expect the 20-day cycle FLD to provide support. So the 20-day cycle FLD is one to watch, as well as the 80-day cycle FLD. As you can see on Monday so far, price action so far today has taken price just a little bit above that FLD, but it hasn't distinctly crossed it yet. So we had a question about Bitcoin. That was all I intended to say about the S&P 500. Let's take a very, very quick look at Bitcoin. I think that I have a workspace of Bitcoin open here, and we can discuss what cycle Bitcoin is in at the moment. And this is not actually my preferred analysis. Let me see if I have a preferred analysis. Otherwise, I'll just have to busk it. And here we go. This is, in fact, my preferred analysis for Bitcoin. As mentioned in last week's market update, I think that the 80-day cycle trough in Bitcoin should be positioned over here. I discussed in last week's market update the fact that the FTX news scandal, dare I say, caused quite a lot of volatility in price action. Okay, so we had this very strong drop down because of the FTX scandal. Then we had this very strong move up again. Both of these moves, in my opinion, were motivated by news events, making the position of this 54-month cycle trough difficult to exactly pinpoint. but it has certainly occurred at some time within this period of time. And this 80-day cycle trough looks very insignificant on the analysis, but that's because of the distortion brought about by news events influencing the price action. We, in fact, have a very good and clean 80-day cycle that elapsed into this 20-week cycle trough. Here is the nest of lows for the 20-week cycle trough. I believe that that 20-week cycle trough should, in fact, be positioned over there. I wasn't planning to speak about Bitcoin, so I haven't really tidied up the analysis on this chart or looked at it in detail. The important thing about Bitcoin is that we are now coming up into a peak. I discussed the peaks in last week's market update, so I would encourage you to go and take a look at last week's market update. Nothing has really changed since last week, in my opinion, in terms of Bitcoin. You can see that we have a circle and whiskers for the 18-month cycle peak and the 40-week cycle peak. So although this is according to the peak analysis, which positions the 20-week cycle peak over here in December of last year, although this is only expected to be an 80-day cycle peak that is forming now, we need to bear in mind that it is possible that this is going to be a peak of the 18-month cycle. So that is what cycle we are in Bitcoin at the moment. I believe this was the 20-week cycle trough, as it was in the S&P 500 and in other markets around the world. A 20-week cycle trough formed there. Price is now moving up into an 80-day cycle peak. An 80-day cycle peak, at least, we need to bear in mind that it could be a greater magnitude cycle peak. So we need to be watching these FLDs, see if we've got any FLDs. We've got some FLDs, the prices coming into now. Let me hide the longer ones. We're not really very interested in those. Prices now coming into a 20-day cycle FLD. And of course, I should probably start running some pop quizzes on these live streams if we're going to do them. What do we expect to happen following a 20-week cycle trough? Assuming this was the 20-week cycle trough, here is the first trough of the 20-day cycle, and we would expect price to find support at the level of the 20-day cycle FLD, which is pretty much where Bitcoin is at the moment. So we would be expecting Bitcoin to find support at that level over there. And that brings me to the end of today's market update video. It wasn't, of course, a market update video. It was a live stream. I do hope that you have enjoyed today's live stream. Thank you very much for joining me. I'm going to bring myself full screen, show that I'm really here. And thank you very much for joining me. I do hope you've enjoyed today's live stream. If we do another live stream, I'm not sure if we will, but if we do, I'm going to be a little more on the ball in terms of responding to your comments and asking any questions that you bring up. Thank you very much for joining me on today's live stream. And I look forward to seeing you on our next one.